So we're carrying an article in CNBC.com talking about how people are not as worried about, even if a recession comes, it's a mild recession, people are not as worried about it as perhaps would have been the case exactly same time 12 months ago.
Right. So, Tanvir, I think the China offset is a very big driver of that slightly more sanguine outlook, that if the whole world was slowing on a synchronized basis right now, we would be very worried. So, in a way, it's a good thing that they have had a belated reopening from COVID, and the second quarter is actually when we will see the biggest payback on the upside to the economy of reopening of trade and tourism and activities. Similarly, on ASEAN, we don't see major loss of momentum, despite the export outlook not looking that great. Domestic demand is holding up. So a big chunk of the world is going to slow this year, but a very big chunk of the world is going to have a pretty decent outturn.
Yeah. You say, can I just ask you, because there's been a number of issues that you can point to right now. You've had, a lot of increased chatter about potential immigration problems and the impact that's going to have on Europe moving forward throughout the course of this year. We've seen what's happened to energy prices in Germany following on from them shutting down those nuclear plants. Are we sleeping a little bit on the impact that any kind of slowdown could, or not sleeping on the impact, sleeping on the potential that any impact or recessionary outcome could occur in Europe, because we've been a little bit blinded by the fact that you've seen such a flow into the equity markets there, and the underlying macroeconomic situation isn't necessarily all that rosy?
Right. Well, I think fragility is substantial, whether the risk of debt rating downgrade in some of the southern European countries, or inflation surprising on the upside because of the drought-like conditions in southern Europe and northern Africa, which feeds into vegetable and food prices in Europe. So there are things on the macro pipeline which could really trip up everybody's perceptions about Europe. I think we're coming off that unexpected positive surprise. We thought last winter was going to be the winter of discontent, and it wasn't. And energy supplies are ample, stocks are substantial, prices have come down. So we have certainly skirted that risk, but that doesn't mean that the other risks have been mitigated. So Europe remains on thin ice, so to speak.